Nest. It's September 16th, 2021, and I'm Jim Chu in San Francisco, California, and we're streaming live with entrepreneurs and investors from around the world. Our goal here on the Nest, if you're here for the first time, is to connect entrepreneurs in frontier markets with angel investors worldwide. We stream live every month, and all episodes are recorded and available on our website, untapped-global.com. So this week, we have two exciting startups from Nigeria, and we welcome back two panelists from before, as well as one new panelist. But before we get started, a quick shout out to our co-host today, Invest Africa. Thanks for hosting us. And this session is part of the Great Africa Debate. And I know, Alexander, you're here, so I'd love to hear a little bit more about the Great Africa Debate.
Thank you so much, Jim, and thank you to all the Untapped team for having us today. Thank to Lindy and Fiona especially for all your support. We have been partnering with Untapped now for over a year, I think it is, Jim, and it's been a fantastic partnership. Throughout the year, we've been doing bits and pieces around the MSME financing space, and we wanted to formalize it. So we're very grateful to have you on board for our flagship event, the Africa Debate, where we've welcomed 300 plus entrepreneurs today for our forum focusing specifically on the MSME financing ecosystem, as well as over 1,200 delegates across the 3 days. So we're very grateful to you both and looking forward to hopefully soon doing one of these live. We're really looking forward to that. So thank you to Jim and the rest of the team.
Indeed, hallelujah to doing something live. And I recently just saw Raj in London, so that was quite a treat. So for any of you, if you're ever in London and you need somebody to take you on a bicycle tour of the city, Raj is the person to take you.
Was it delightful? Was an adventure, Jim. Thank you.
No, thank you, Invest Africa, for partnering with us. And I really do hope we do more live sessions together in the future. And there was also a second Nest event earlier today. So again, thank you for hosting both of our Nest events on the Great Debate. Well, great. Now, before we get started, some technical tips for today. For those of you in the audience, we do want to hear from you. We're trying to keep this as interactive as possible. So we left the Zoom meeting open on purpose for questions and comments. So please use that chat box and talk to others watching the show, make comments, ask questions, and introduce yourself. We want to hear your insights about these companies, about the markets they're in, and your questions and comments are always appreciated. So please join us. And now let's introduce the angels. All right, Umulinga, welcome to the Nest for the first time. Would you like to start first with introductions?
Thank you very much, Jim Chu. Good afternoon, good morning, depending on where you are. It's a pleasure to be here today. Thank you for having me. My day job is I'm a fund manager. I invest through Africa through different asset classes, and I've been doing that for a long time. And what I've done more recently that I really very much enjoy is angel investing. I'm a member of Nairobi Business Angels, NAIBAN, and a few other networks, and we are a new angel network. We support founders from East Africa and outside. That's something I really enjoy doing, yeah, I'm looking forward to talk to other angels tonight and hear the pitches. Thank you.
Thank you. And I understand from Nick that you have quite a bit of an angel network developed in Nairobi these days. How large is the angel network, the Nairobi angel network?
So now we're more than 30 angels. And I would say that compared to other networks I've been a part of, this one is quite experienced for the level of because it only exists since April this year. And of course, we are blessed that Nairobi has such an attractive tech and startup scene. So there's a lot of stimulation, a lot of debate, a lot of people pitching to us. We've closed one deal and working on closing 3 others. So that's quite a lot for a brand new network. But we also are blessed that Nairobi is a very, very busy place.
Yeah, no, indeed. Well, welcome, and hopefully we get yourself and others from the Nairobi Business Angel Network to join us in the future.
Great. Mm.
And Raj, welcome back again. Great to see you on Zoom. And I hope you don't mind me plugging your bicycle tour services to the rest of the world. But welcome back. Love to get a little introduction from yourself as well.
Sure. Other than my bicycle touring career, I currently work at, my day job is at Dentons, covering 3 geographies: Africa, Middle East, and Southeast Asia. And my part-time job, or my night job, my side hustle, whatever you want to call it, I'm an active angel investor, investing together with my very close friend Vishal Agarwal, who's based in Nairobi. Some of you may have seen him before, and we are investing in early stage tech and tech-enabled businesses in Africa and the UK, primarily in Africa and the UK, and then with some across the world. And our current portfolio is about 45 companies, some VC funds. It was really great to see one of our portfolio companies on the nest this morning. And for the first time, it was a portfolio company. No, actually the second time, portfolio company has come into the nest as opposed to come out of the nest into us. So that was really, really nice to see. That was
good to hear those success stories.
Yeah, that was in LA with Bello, right? So thank you for the nest for supporting entrepreneurs that we've got an interest in as well. So thank you very much.
Yeah, thank you. It's part of the ecosystem that we're all trying to build. So I'm glad to hear that we're all working together and part of that network. Right, and we also have Kristin. Kristin Wilson, join us. Thank you for joining us today.
Absolutely. I'm glad to be back as well. How's it going, Jim?
Very good, thank you.
All right, pleasure to meet you all, Raj and Umulinga. I think it's my first time meeting you both. So just by way of introduction, I'm a consultant mainly, and a bit like Raj, I guess my side hustle has been pretty active angel investing, which I've been doing since 2016. And then earlier this year, actually launched a syndicate that's focused on early stage, like super early stage value of death type investments. So that's been a pretty fun year so far.
Great, well, welcome back. So over to the pitches and the angels. We have Tola and Natalie on deck to present, but before we do that, just some quick rules of the game. So as you know, you have 5 minutes to pitch, and after those 5 minutes, we'll have 15 and 20 minutes of discussion, and hopefully some discussion about investments. But you will be held to those 5 minutes, so please don't exceed your time because we will cut you off. We want to make sure that we have enough time for questions and answers and comments from the audience. So with that, Tola, would you like to start first? Feel free to share your screen and then we can get started.
Hi, everyone. My name is Tola Adesanmi, and I'm the co-founder at Spleet. When we moved back in 2018, my co-founder and I, we found out that renting was very, very difficult, right? Out here, you have to pay your rent upfront, 2 years upfront, or in favorable cases, pay your rent 1 year upfront. And after, on my own path, 2 failed startups, we decided to solve this problem by building out an online marketplace for affordable residential rentals and rent financing in Africa. Essentially, what we wanted to do was bridge the gap between landlords and tenants and provide tenants the affordability or accessibility to afford rent by paying their rent monthly or as flexible as they can. As I mentioned, there's a personal earnings and rental payment mismatch. Landlords, the way the system works today, traditionally, landlords take up to 2 years upfront, and tenants can't normally afford that. They usually have to go and find, debt situations that are unfavorable and products that are not matched to their needs, to their rental needs. So we decided to build out an affordable rental loan solution, a marketplace with flexible payment plans. So landlords were able to onboard their spaces and rent out to vetted tenants on our platform who will pay their rent, on time, monthly, quarterly, or as flexible as they want to. We have free listings for our landlords. For our tenants, we have access to facility management, co-sharing options, which sort of reduce the cost of living. Rental loans, we just started that in September, and value-added services. So to create stickiness for our customers. Our journey has been an interesting one. We started in January 2018, bootstrapped it for about 15 months. We started with one landlord and 8 rooms, and not so much in capital. After 15 months, we decided to raise a pre-seed. We raised $265,000 from family and friends out here in Nigeria, and some angel investors, some notable angel investors in Africa. We went live with our MVP product for bookings and automated rent renewals, so as to create that, to sort out the demand problem for rent on our platform, as our waitlist was growing. We launched our full solution last year, early this year, and raised a pre-seed round of $650,000 from angel networks, angel investors, and early stage VCs, such as Future Africa. And then we became the first proptech to be accepted into the biggest proptech accelerator in the world in MetaProp, which is where I currently am. I'm in New York. I'm currently attending that accelerator program. Our business model is pretty straightforward. We offer loans, minimum 1 year loans to people that want to rent a space or have found a space to rent. We do this by partnering with institutions, businesses that want to offer these loans to their customers. Hosting is currently free for all landlords. We earn about 2 to 10% on all value-added services. And on our marketplace, we take a 20% premium on all monthly rentals. The market is huge. In rental in Africa is over 150 billion. And just in Nigeria is a $30 billion market. And we want a slice of that pie, as we have been building. In Lagos alone, we have 230,000 young professionals between the ages of 25 to 35 that can afford spaces in our rental marketplace or afford to take rental loans from our platform. We have over 15 hosts on our platform and have had over 221 tenants with a growing waiting list of over 60,000 potential tenants. We launched our rent finance product in September of this year, early this month, and we've disbursed about $25,000 in rental loans. And we processed over $1.5 million in rental transactions on our marketplace. For our value-added services, we have credits disbursed by Evolve Credit, laundry and meals by Eden Life, just to create that stickiness for our customers and our landlords, insurance for both landlords and tenants. And we also have health packages provided by Numa Care. Some of our landlords include Sterling Bank and VFD Microfinance Bank, providing homes via our platform through their housing businesses. Our competitors include Airbnb.
We're at 5 minutes, so please, if you can finish up the slide.
Okay.
We can get on to.
We're currently raising a 2 million seed round, and we're currently in Nigeria and plan to expand into Ghana, Kenya, and Rwanda in the next 2 years.
Great.
Thank you.
Thank you very much, Tola, for the presentation.
Yeah. Thank you.
Over to the angels. Anybody have any comments or questions? Raj, Umulinga?
Yeah, let me start. This is a great presentation. Thank you very much. I would love to hear more. I have a couple of questions. So first thing is, so am I understand that the model is effectively buy now, pay later, effectively, because you're
yes.
giving
rent now, pay later.
Yeah, the rent now, pay later, right? So you're giving people, you're paying the landlords the 1 year's rent up front, and they're paying you in return on a monthly basis, and you're taking a margin. Is that basically it?
Yes.
So that's, you've clarified that. Thank you very much. So my question to you is, what happens if this market changes, right? So if, let's say the government says you can't have 1 year payment in advance. I'm going to park that question because that's a sort of hypothetical question. Park that question a minute. The second question I had was, you said there's 60,000 people waitlisted. Can you unpack the 60,000 people waitlisting thing?
Okay.
How does that work? And, you know, why is that such a big demand? How have you not been able to satisfy the demand?
So when we just had only the rent marketplace, this will answer both questions. The rent marketplace, if the government says you can only take rent monthly, because we are in a low trust environment, our platform will blow up because our platform will become one for landlords to receive their rent, right? On the waitlist side, the reason why we have that big waitlist is when we only had a marketplace, we literally have month on month 98% occupancy. Anytime we put a space on board on the platform, it quickly goes. And because our rent marketplace is literally a no-brainer, everybody really wants to pay their rent monthly or as they earn, right? So we're growing a wait list faster than we are able to get the supply onto the marketplace, which is why we decided to launch the rent financing, which will allow us to solve the problem faster than getting landlords onto the platform.
Okay. So currently your problem is you haven't got enough inventory to put on the platform. Is that right?
Yes. Not as much inventory as demand.
Okay, understood. So I'll keep quiet. I have some more questions, but I'll let other people go.
Thanks, Akintola. Thanks, Raj. So how do you select tenants? How do you avoid bad tenants? And what are, like, how do things go wrong sometimes, and how do you fix it? Do you find a new tenant? Do you reimburse the landlord? What do you do?
So great question. Because in our model, we're able to evict tenants in 7 days as opposed to 6 months, which is the traditional model. So if we do have a bad tenant, we have that covering us. However, on the marketplace, the kind of tenants that we have are usually like business professionals. We do background checks on them. So we have APIs that are integrated to do those background checks before we accept them. Before we accept them on the platform. And we also do financial background checks to see if, they actually receive salaries that can, pay up at least 50% of their rent, or 50% of their salary can pay up their rent and things like that. On the financing side, sorry?
Is this automatized on the platform, the selection of a tenant?
Yes, it is automated.
So do you use like Smile Identity or other ways to
so we use Approve. We actually use Approve.
Okay.
Approve,
okay.
Yes. Yeah. On the rent financing side, sorry, it takes maximum 48 hours, sorry. Maximum, but most of the time we're down with 24 hours. It goes to 48 hours if we cannot do, most times the problem is financial background check. So if the finance details are wrong and things like that, or the bank is not approved for that financial check, that's when we have that long. But yeah, then we do it manually.
Okay. Yeah. How many people are doing it manually if it doesn't go through the system?
If it doesn't go through, it's really the financial bit. So we ask them to give us their financial details via Mono. Once we can get that, we just check. We do the checks that we would have done automatically.
So you're integrated into Mono?
Yes. For the financing, mostly, yes.
Okay. I guess I have a question sort of as a follow-on to Umulinga's question, which I think we talked a lot about. So both Mono and Approve are really addressing the kind of, can they pay for the service? But since you're in the Nigeria market, you know that there's other things the landlords are looking at when they decide whether or not to allow a tenant into their property. So I'm curious how you're validating those things as well. Because I think are almost even more important for the landlords, right?
So one of the bigger things, one of the things that we decided to not get into was some of those things, cultural biases. So for instance, landlords don't want women in their spaces. We found out that when we launched Spleet, we found out that we were solving a critical cultural problem where landlords will not rent out their spaces to single women. We are trying to build a platform that doesn't have those cultural biases. right? So people can rent a space even if they're a single man, but the cultural biases have already targeted them and said, oh, you're a single man, you must be a fraudster, or you're a single woman, you must be a prostitute, or something funny like that. Those are the cultural biases that currently exist with landlords today that we are seeing that we're also removing. With landlords, because they don't.
How are you achieving that? Like,
Sorry?
how are you achieving that? What's the work that you guys are doing
Because
to make
because basically the landlords have made those cultural biases by, because it's traditional, right? They get to meet these people. 90% of the landlords on our platform don't meet the people that stay in their spaces. What they know is that they're receiving their rent month on month on time, and that Spleet is responsible for who's staying in that space. So we're building that trust with the landlords over time, right? One of the things that we'll be launching is testimonial videos from some of our landlords that started with us to sort of convince all, more landlords to come on board, because it's also stressful when landlords try to deal with tenants, right? We're also removing that, that issue from the process.
Okay. And then my second question is that, so there's the paying your rent aspect of it, right? But then there's also the service charges and day-to-day maintenance pieces that have a huge impact on whether people stay, where people go. And I'm curious what sorts of interventions you're making in that regard.
Okay, so most of our spaces actually have maintenance included, and services included. We run that with two partners today, Filmo Realty and proptech. They are maintenance and facility management companies that run all the spaces that are onboarded to our platform. So in situations where landlords accept that they want those maintenance companies to run, maintenance in those spaces, we do that. The kind of landlords that don't necessarily need those services would be business landlords. So landlords that have multiple units and do the rental business as a business, as opposed to, individual landlords. They already have maintenance in place, facility management in place.
So actually, can I follow up on that question? Because, look, I'm two things. One, I'm a landlord. I have a couple of properties here in the UK, and I'm also a shareholder in something called House, H-O-U-S-T. Check them out. They're like an Airbnb platform, which Yeah. And the biggest pain point is actually getting maintenance when there's a problem in the property, right? Mm-hmm. For the company that's managing the property to get these things sorted out quickly, mm-hmm. painlessly, et cetera, right? And it's an operations piece. It's not about technology.
Yeah, I know.
It's just about operations. And I think one of the biggest challenges I found as a landlord, even with technology, is that at the end of the day, you still got to find someone to come and fix your leaking plumber or, whatever it is. And the guy doesn't do a good job and you come back and how is that all how you kind of dealing with all of those issues? And are you dealing with those issues? Number one question, have you got a different sort of payment plan system where, you can take away all those issues and it costs more, or the landlord can deal with it directly and it costs less? Can you just talk us through how that's working?
Yeah, so our tenants, most of our tenants today pay monthly subscriptions that include maintenance, a fee for maintenance, right? For those tenants, they get maintenance every day, 24 hours from our partners, proptech and Filmo Realty, like I mentioned earlier. So all we have done is we've built a system where customers can request and give feedback on maintenance done in their spaces. So we can hold these companies accountable for those maintenance, the maintenance that's being done. That's basically how we do it. We have a system that, that allows customers to request, and we can put together like a 24-hour turnaround time with our partners. So they're on call 24 hours to respond to whatever issues exist in those buildings. Because I understand your question. We don't build buildings, we don't own buildings, and buildings, quality of buildings differ from building to building. So we built the system that way so that we can hold customers accountable, and we can also hold our partners accountable for maintenance that's being done in all these spaces. So that ultimately, okay.
So Tola, we have some questions from the audience, a few around your geographic expansion.
Okay.
You mentioned Ghana, Kenya, and Rwanda. Tell us more about that and how you intend to go into those markets.
Ghana is a mirror market of Nigeria in terms of rental. Rental is actually more expensive, and you're required 2 years rent upfront. We're currently integrated into Flutterwave. We should be launching in Q4 of this year, October actually. In Ghana, we're launching with one landlord that's giving us 300 units. They're a company that does rental in Ghana. In Kenya, it's slightly different. In Kenya, you pay monthly rent, but from our research, we went down there physically. We found that landlords sort of have an issue with onboarding tenants or getting tenants into their spaces. And there's an agent system that's not very open, right? So we're coming to solve that transparency problem for them in Kenya, where landlords can manage and get customer acquisition faster via our platform. Same thing for Rwanda.
There's another question. Go ahead, Raj.
Sorry, the one question that I was really wanting to focus on is what's your traction today? What's your revenue? Can you just talk us through all your numbers, because we haven't seen that?
Okay.
I would tack on to that traction question, the sort of like repeats, how many people are actually coming back year after year, staying in the same properties and so on.
Okay. We have an average occupancy of 18 months. So that's the lifetime value of a customer, averagely. We're doing about $95,000 month on month in revenue. It dipped because we lost one landlord who had a 28 unit building on our platform. They wanted to sell that building. So it dipped from $115,000 month on month to $95,000. We've had about 221 long stay customers on our platform since inception, move in and out of spaces on our platform. And we just disbursed about $25,000 of rental loans. We actually started that in September of this year, early this month. Yes, that's our traction date from to date.
And the loans, who's giving you the balance sheet to provide those loans? You're not trying to do it off your own balance sheet.
So VFD Group, VFD Microfinance Bank is a microfinance bank here. VFD Group is an investor in Spleet, so they're providing us that cash. But right now, when we raise as we're raising our round now in the States, we will be raising venture debt with that to provide those loans.
Okay.
One additional question, unless Umulinga, do you have another question or a comment?
I was just going to ask how you recruit landlords and how fast it's going, and when you get those 2 million, how much acceleration will you see?
Okay, we're really focused on B2B, so more landlords that can give us multiple units, more business landlords that can give us multiple units. That's our real focus. We're adding an average of 20 rooms per month, not where we want to be honest. But we believe that when we roll out our testimonial videos, we should get a bit of traction from the individual landlords, the ones that can give us spare bedrooms, the ones that can give us one house, two houses.
And how sticky do you think you're going to be with your platform if someone does something similar? How are you going to keep them?
How are we going to keep the landlords? I think the way this business works, it's once a landlord is satisfied with a particular platform, so far as they are receiving their rent on time, I don't think there's any reason to switch, right? Because the truth is, you can't really offer more than what the market says, right? If you're trying to reduce prices, or that kind of deal would catch up with you in the long term. The only reason we've seen people churn, landlords churn, is when they want to sell off the units. And in some of those cases, we sort of request that they introduce us to new owners in case those new owners want rental income. So in a situation where we had a business landlord who was selling off 15 of their 4-bedroom flats, they sort of just introduced us to the new owners, and we just switched the rental income to the new owners because that's what they wanted to use it for anyway.
So like what you haven't told us is what your valuation is.
20 million cap. It's a safe. We're raising 2 million at 20 million.
20 million cap on 90,000. What's your ARR? Annual recurring revenue is what?
1.5. On track to do 2 million now, but 1.5.
Okay, thank you.
So I'd love to hear from the angels what they think about this investment, and the audience as well.
By answering the questionnaire or telling you?
By both. Telling us first, it would probably be best. Love to hear your opinion. So you can sway the crowd in a positive way.
Okay, I like this space. As you know, I've invested in a few companies in the space. I like the space. I don't know the space in Nigeria. I know there's a big problem about renting in Nigeria because of this. You know, you have to put 1 year deposit, 2-year deposit. I do know that problem very, very well. So I'd like to have another conversation with Tola, and maybe with my partner Vishal, we can set it up.
Would appreciate that.
Yeah. So I like it. So I like it. I feel as with all these things, the valuation is a bit toppy, but you know,
we could talk about that.
That's his opening gambit, so that's okay.
We could talk about that.
But
yeah,
I like the problem you're solving. So yeah.
I like it too. I like it too. I'm not convinced that it's going to be easy to replicate in East Africa because it's completely different. Yep. But Nigeria is big enough to already do well, and then you also have Angola and other places where rent is crazy, like in Nigeria. Yeah. But yeah, I like the idea, and I would also like to have a follow-up call and know more about your team.
Okay, thank you. Thank you so much.
Yeah, for sure. I was gonna say the same thing. I sort of picked up on when you guys started a couple of years ago. And my big question was, why aren't you guys offering financing? Because that seemed like an even more interesting problem to solve than the housing problem. So I think this is a really, really amazing sort of like pivot that you've done over the last year or so. I actually completely agree with Umulinga. I don't think Kenya is going to, unless you're sort of offering a completely different model. I think there's other markets around the corner that could be more interesting for you that are in desperate need of the model that you're currently using right now. So I would certainly pay attention, a bit more attention to that, but certainly interesting, good progress so far. So excited to have a follow-on call and see what we can make of this.
And similarly, you have a really interesting feedback from the audience as well, with over 80% indicating that they would invest something in Spleet. So congratulations. And I think there might be a interesting conversation with Untapped as well, because we may have an interest in looking at providing some of the financing for that rent. So get in touch with us, and we can get you in touch with some of our folks.
How did I get in touch with that?
Jim, you provide the finance, we'll provide the equity, we'll get a better valuation. Be good.
There you go. Well, that's the entire idea of Untapped, is provide venture debt so that companies like Tola's can scale and get better valuations without dilution. So how do you get in touch with us? Jim at untapped-global.com, or show me the money at Untapped. I'm joking. Jim at untapped-global.com, and
okay.
Very good. Thank you very much all and Tola for the presentation.
Sorry, one more thing. Raj, how do I get in touch with Raj and
the Untapped team know me well, and the Nest team know me well. They'll put you in touch with me.
We'll put everybody.
We'll make an intro.
Thank you very much.
Perfect. Well done. Well done.
Thank you, everyone. Yeah.
Thanks.
Thank you. All right. Well, over to Natalie from Koolboks, jumping right in. Welcome, Natalie, and let us know when you're ready.
Yeah, I'm ready to go. So thanks very much, Jim. Thank you for the introduction. I am the Chief Business Officer at Koolboks, where we make eco-friendly refrigeration affordable and accessible to all. So I wanted to start the presentation today by sharing a story about Mama Ibadan. She's a fish trader in a Jora market in Lagos, Nigeria, and one of our first customers. We paid a visit to her a few months after installing her solar freezer to see how the product was working, to get her feedback. And she shared with us how much this product had really impacted her life. She said, "I can't tell you the number of times that I've had to empty my freezer into the sea because I did not have enough power to conserve my fish." And so our solution has solved a big problem for her. Now she's able to preserve more of her stock, to sell more, without relying on generators or polluting diesel fuel. So our solution uses the power of two natural forces, the sun and the water. And to do that, we created an off-grid solar refrigerator technology that uses the patentable Cool technology. And so in doing so, we provide 24 hours refrigeration, continuous refrigeration by storing energy in the form of ice. Our systems eliminate high upfront costs and by offering lease to own and cooling as a service agreements. And we also protect the environment by providing not only a solar solution, but one that uses environmentally friendly refrigerants. So our system has different components. We have solar refrigeration systems that are integrated with pay-as-you-go technology. And what that enables us to do is to provide innovative financing. So our customers are able to either pay directly, they're able to lease to own our systems, or we even offer service agreements as well. How does this work? Well, the thermal cooling technology is basically taking the sunlight, converting it into electricity with the solar panels. And normally you would need to store that energy captured by the solar panels and external batteries. But what we've done with our innovation is that we then store that energy in the form of ice. And so you see on the bottom, in the bottom image, that there are what we call ice batteries or ice packs that are basically enabling the freezer to have autonomous cooling from between 5 and 7 days, even in the absence of sunlight. Refrigeration is a large, underpenetrated and growing market, estimated at $72 billion worldwide. And with 770 million people lacking access to electricity in sub-Saharan Africa, there's naturally a low penetration of refrigerators, so 17% versus maybe 100% that you would find in the US or in Europe. Our business model is we operate in two different channels. So we operate through a B2C model in Nigeria, where we sell to customers in installments through our Koolboks credit system. And we also have a B2B business where we sell to solar distributors who are already offering other types of solar energy or appliances on a pay-as-you-go basis. So for this investment opportunity, we're offering a solution that is first of its kind, using Cool technology that is pay-as-you-go enabled, ideal for productive use and also for healthcare use. We had early success with our first year of commercialization. We sold 876 units and exceeded our forecast by 150%, and even recorded a profit margin in that first year. We're based in Paris with an offshoot in Nigeria. We have expansion plans both in Nigeria and then in the longer term in other markets in sub-Saharan Africa. And we also have existing relationships with distributors in 12 countries. Our management team has over 40 years of combined experience in large multinational companies and different levels of leadership. And we also count on the team that has technical expertise in both industrial design as well as the thermal cooling technology. And we also have on-site leadership for our commercial organization that is established and growing in Nigeria. So we're currently in the process of raising our seed round, $1.7 million. And for that 1.7 million, we plan to invest in working capital to continue to grow our business, particularly in the B2C business in Nigeria, with plans for local assembly as well as team building. But most importantly, the money would help us to make a reality of accessible refrigeration and clean refrigeration for people like Mama Ibadan. So with that, I'll conclude and thank you for listening and take any of your questions.
Thank you, Natalie, for a great presentation. Over to the angels.
My first question is, do you plan to stay based in Paris or do you plan to move to Nigeria?
So for the moment, we plan to keep our holding in Paris. We have 4 employees based in Paris, including the CEO, myself, as well as our chief operating officer and finance manager. So the plan is to stay in Paris. Of course, our CEO is originally from Nigeria, and so he's quite often traveling back and forth, especially now that we're in the process of building a team and building out the Nigerian organization.
What is the cost of the averaging that you sell, and how long do users take to pay for it? And how much risk there is, like how many users, what's sort of NPL, like how many that don't pay?
Yeah, that's a great question. So our timeline is still a little bit early to have definitive statistics about the B2C model in particular. Most of our sales, and just as a caveat, were through the B2B channel in our first year. And so in this year, we've been piloting the B2C model in Nigeria to see if this was really going to be a promising avenue for the company. So we currently have about 80-ish customers onboarded through Koolboks, which is our B2C platform. And we started onboarding beginning of this year. And to date, we only have 1 customer who is late in payments, but in discussions with the company to figure out a payment plan. So not a total write-off yet. And then I think your other question was about the length of payment. We offer contracts up to 24 months. What we find, though, is that there's a strong incentive to have asset ownership as soon as possible. And so actually most of our customers have been signing up for 6 or 9 month agreements. The average price, it really depends on the system. So we offer different sizes. And also we offer different configurations of the solar panels and even external storage depending on the needs of the customer. So our pricing is between $1,000 and $2,000 for the system, depending on what it is, and as well as on the term of the loan.
Natalie, thank you. Natalie, thank you. Great presentation. Thank you very much. A really interesting idea. Not many people are doing this. I had a couple of questions, and maybe you can just talk to generally. Tell me about the intellectual property and who owns it and how does it work, et cetera, et cetera. Is this new technology? Is it old technology? Is it simple to replicate, et cetera? Is it your own system? Where is it built? Who's all that sort of stuff? Sure. And then talk to me about your distribution model, because I mean, you can have the best product in the world, you can't distribute it, it's no use, right? So how are you distributing these? And then thirdly, perhaps you touched a little bit about that, how are you financing it? And there are a lot of solar companies who are today providing, so I know Bebop well, and I know Mkopa well, they're providing financing for people to buy fridges, right? So right. Could you just integrate yours into one of these solar companies and say, when you're selling your panels, you can also sell these? I mean, can you just, I'm sorry, there are lots of questions there.
Yeah. So I'm actually going to start with your last question, because the B2B model that I had shared was actually with customers exactly like the ones that you've just mentioned and described. So they are distributors of solar home systems and associated appliances. Generally, they're already integrated with different pay-as-you-go platforms. And so the beauty of our product is that we can integrate with the primary ones that are available on the market and easily fit into their portfolio of asset financing. And that was actually the way that we started last year in the market, was to reach out to those solar distributors And since, as you also mentioned, there aren't too many companies that are working in this space, and there's also quite a high demand for refrigeration, especially for productive use, then yeah, it's been, we've been getting a lot of referrals as well as just spontaneous inquiries, and with the distributors that we signed up already, multiple repeat orders from last year. So we're definitely exploring that. We also felt that it would be important for us to test the waters with the B2C model in Nigeria, because we feel like while we could continue to be a manufacturer that would sell to solar distributors, that it would really be a way for us to quickly grow and increase our reach directly to the consumers. So during this year, we've started piloting the B2C model, that has been supported by grant funding primarily. And then the idea is that once we conclude our seed round, we would be able to ramp that business up more rapidly by having that funding available. On the IP side, so the design of the freezers and the ice battery technology, that design is our own. So one of the members of our team, who is an industrial designer, he helped us design the ice batteries and the compartments within the freezer, so that those designs are unique and our own and are patentable. There is similar.
Is it patentable, or you've already got patents?
We filed for patents.
You filed.
Yeah, we're still concluding the filings. So the thermal cooling technology already exists, and you may be aware of other companies that are using such type of technology. But really the design itself, especially of the ice battery, and also the integration of PAYGO into the compressor of the refrigerators, means that if there is no payment, then there is always the ability to deactivate remotely the refrigerators. Yeah,
I like that. Okay, thank you, Jim. This looks like another one for you, Jim.
Yes, we're already chatting, so it's a good thing. So there's a question from the audience. I know Umulinga and Kristin, I'm sure you have questions, but there's a related question around B2C, B2B. How do you manage service and maintenance?
Yeah,
do you have a team? Do you rely on distributors? Because that is, from an Untapped perspective, a very critical part of the whole equation, because we need to make sure they continue to operate.
That's a great question. So with our B2B business, we're working already with qualified solar installers in a way that they are providing the asset financing, but they're also installing the solar home system. So they're quite familiar with solar systems and how to ensure that that everything is working properly, how to troubleshoot. And we also provide onboarding training where our technical team, when we sign up a new distributor, would travel to their country, train their local team prior to starting to sell to end customers. That we have plans to expand that team as we ramp up the B2C business in Nigeria. And so we would have additional technical support, as well as a growing sales team after sales. We have put together KYC process and credit controls already, so that we're preparing for what comes next once we close our seed round.
Gotcha. Thanks for that. Umulinga, Kristin, any questions from you? Comments?
Have you already secured part of the 1.7 million?
We're in advanced discussions, yes, on the 1.7 million.
Okay.
Yeah.
And related to that, how much of that 1.7 million, you may have not separated this in your planning, but how much of it is intended for CapEx and how much is it intended for what I would call OpEx?
So yeah, great question. Really the CapEx would be for our planned facility for local assembly. there's been a lot of disruptions this year with I think manufacturers around the world related to manufacturing in China. So Raj, to answer your earlier question, we currently manufacture in China. We also pay significant duties when we import to Nigeria. And so we have plans to have local assembly in the country, which is also a way for us to create jobs and avoid some of the costs related to import, as well as the supply chain issues with relying on suppliers in China.
So currently you're just importing them from China?
So again, the designs are our own, so we contract manufacture in China, and then we ship them to Nigeria and to the other countries where we have distributor relationships.
And then the idea is to build a plant in Nigeria to assemble them, or to build the whole thing?
So we would start with assembly. The components would still need to be imported, but we would start with assembly, potentially at a next stage.
Because one of the challenges of these companies is actually getting anything through customs and import. I don't know whether you've had those problems or not, but I guess that's what it is, right?
Yeah.
Have you talked to local angels, Natalie? To local angel networks in Nigeria?
Yeah, so we've been talking to a lot of people. Yeah, we've been in many discussions, and hoping to close very soon the seed round.
And I know Kristin dropped off and just came back. Welcome back, Kristin. Did you have questions or comments for Natalie?
I did. I hope you can hear me. I was having a bit of trouble with the connection. Hopefully you can hear me now.
Yep.
Awesome. So I was asking, I was curious about this patent. So it's just a design patent that you file, right? Nothing on the technology. So in theory, somebody could replicate the technology, but with a different designer. Could you just speak to how much protection, say you were granted this patent, how much protection it would actually give you?
Yeah, that's a great question. I'd actually have to go back to the team to get additional details. So yeah, maybe take a rain check if that's okay. Yeah.
Okay, no, that's totally fine. And then I kind of have a second question, again, still on the sort of like the design and the technology, is how modular are these units? So could you sort of apply this, retrofit this to something else, you know, a different kind of setup, or is this design sort of targeted at these deep freezers and you would have to sort of build out a whole new system if you wanted to do something different with the technology?
Oh, that's a great question. So I would say it's not really modular in the sense that some systems where you can say, okay, you take these different components, you put it together, and that's how I understand sort of modularity.
Yeah.
But the designs can be adapted. So we have other products in the we've been able to offer multiple sizes because of the flexibility with the designs that we have. And we're also working towards other products. So one program that we're participating in currently is funded through the IFC. It's called Tech Emerge, Temperature Control Logistics Nigeria, where we've partnered with one of the local adopters to build a mobile cold storage unit. And so the idea is that we would be testing it with farmers who would store their tomatoes after harvest and reduce wastage in the agriculture sector. So, you know, there are a lot of opportunities to work in different areas of the cold chain, and adapting the technology depending on the needs.
Okay. And what do you think the pathway to that would be? So for instance, the use case that you just described, how long would it take for you to actually have a functional prototype?
So our plans are to have the functional prototype within 6 months.
Okay. Helpful. And then, so this is all of the sort of like hardware component of it. What are you guys doing at the level of software? Are you sort of aggregating any kind of data? Are there any plans to kind of leverage this data for, you know, any kind of like machine learning that allows you maybe to give some predictive, do some predictive analytics that might help you sort of educate your farmers or your users on things that they should be aware of, maybe time of day, so on and so forth. Maybe even collecting information about locations where these things are being used within units and so on and so forth. I'm just curious about the technology.
Absolutely. Yeah, so another great question. So we've actually integrated the freezers with IoT technology. The pay-as-you-go is obviously a part of that, but we also have a line of fridges for healthcare use. So those would be primarily to store vaccines and would require temperature monitoring. So we have in the vaccine fridges embedded temperature monitoring where we can and geolocation, so we can see where the fridges are anywhere in the world, at what temperature they are, and the historical as well, and if any of the temperature ranges have been compromised, due to deviation. So certainly a lot of interesting data there. Also data from the consumer side. Having the pay-as-you-go and having some credit history and data on different profiles of customers. So that's certainly an area where we're looking at collecting data. I think that there are many possibilities. So definitely an area that we're thinking about.
Awesome. And
Great.
with this monitoring, oh, sorry, one last question.
Last question.
I'm just curious, this monitoring piece, this monitoring piece, is it offered as a kind of value-added service, or is the monitoring something that you expect users to be responsible for?
Oh, that's another great question. So currently we have one kind of use case with cooling as a service, and that is with our vaccine fridges. And so the idea would be that because we're providing this temperature monitoring as part of the service, in addition to installation, maintenance, any type of problems after sales that would occur. So we are for the healthcare fridges embedding that as part of the service agreement. And a couple of weeks ago, we signed our first contract in Delta State, where we are. Yeah, thank you. We're going to be deploying 15 of the Koolboks vaccine fridges in rural areas in Delta State, following a successful pilot from last year.
Great, thank you very much for all the questions. Now, I'd love to hear the investor panel's feedback on next steps. Is there an interest from the investment panel and others in the audience? Who'd like to start?
I'm sort of happy to go ahead. I want to know more. I'm very, very interested. I was talking to Jim, I think last week or so. This is the space I'm very interested in. This kind of like hardware, software, IoT space. So I would love to have more conversations with you about what you're working on. But I think it's a really welcome intervention. I think that the market for these kinds of interventions is only going to grow on the continent. I think that as you sort of think about your positioning between Paris and Nigeria, there's some interesting things coming out of South Africa as well, a couple of interesting companies that I think I would keep my eye on as well, that are trying to intervene in this space and are looking at the West Africa market and, broadly speaking, this kind of like agriculture and healthcare use cases. But really excellent innovation.
Great, thank you, Kristin. So we'll be in touch afterwards.
Shall I go next?
Yes, please.
Again, Natalie, great presentation. I love what you're doing. Can you remind me what the valuation was? We never got into valuation, or did I miss that?
No, I didn't share the valuation, but happy to do so privately.
Okay, fine. So where my head is that, look, love the product, love the idea. Jim and I invested in something that's very similar, but in the solar and water desalination space. And the biggest challenge is capital for these kind of businesses, right? It's capital and logistics and operations, right? I mean, technology, fine, great, all that. So I have a big, sort of not a big problem. I have a big concern about these bits of the pieces, which I find it very difficult to get my head around in early stages of these companies. So it's a pass for me for that reason, but I'd like to keep in touch to see how you grow. I'd also like to connect with you because I think we've invested in a couple of things in Nigeria that actually might be quite useful for you. So one of the businesses we invested in is Omnibiz. Have checked them out. They supply about 30,000 retailers in Nigeria, FMCG products, right? Now, if we can get your Koolbokses into even 10% of those 30,000 customers, there you go. You've got a different business, right? Right. So let's have a chat about that. And I'd like to help. But as an investment, it feels too early for me for the space you're in, which is kind of hardware, software, kind of space, right?
Yeah, thank you for that. And also, again, we only had 5 minutes, but I will share that the corporate kind of customer profile that you described, we too think that could be quite attractive as a potential channel. And we've started also through the IFC program with two pilots with large distributors of poultry as well as dairy products. And we were also part of the World Food Program Zero Hunger Sprint Nigeria, where we connected with a corporate investor, Toleram, which I think you're familiar with based on what I've seen a bit on LinkedIn. And so
they're often on the nest as well, but yes, go ahead.
Okay, yes. So they were quite interested in Koolboks and were the company that provided us with funding through that program, as well as interest in potentially purchasing our products for distribution. So
I was going to say Omnibiz is actually also a Toleram company, and we know Toleram very, very well. So I think those be two people that I would suggest you can talk to. If you're already not talking to them, I'm happy to connect you. So let's do that.
Okay. Thank you so much.
Thanks, Raj. Umulinga?
So great presentation, Natalie, and for sure there's a need for that product. For me as an angel, it's a bit difficult to invest in hardware capital intensive businesses because of the time it takes to grow the business. That's why tech-enabled things that can be scaled fast is more attractive as an angel. And so yeah, I wouldn't invest because I don't think I could add value, and I don't think the horizon is right for me as an angel. I think it's a bit difficult to run a Nigerian business from Paris, but maybe it's not difficult for you. So that also is something that I found would be a reason for me not to want to invest. But you should speak to the local. I mean, you're already speaking to them, but if you want introductions to the local angels, I've done investments with Rising Tide Africa, so I hope you're speaking to them, especially when there's a female co-founder. They're very keen to support.
Great, yeah, I would be happy to have the connections. Thank you so much.
Great, I'll intro you.
Yeah,
I hope, Kristin, your connection isn't the greatest. And we're already in discussions, Natalie, of course, but just to echo some of the things people have said, addressing Umulinga's concern or perhaps reasons why she's passing, CapEx financing or financing of CapEx heavy businesses, we think is a major opportunity. And because there are so many businesses in Africa that are CapEx heavy, and we recognize that it's not a model that is usually perceived as well from a venture capital perspective. But we think there's good opportunities to finance CapEx heavy businesses, and we love to do that. I think the two concerns, echoing what some of the other folks have already said, are one, we do need to make sure that there is a very significant and well-established service and maintenance program in place, whether that's delivered by your distributors, local partners, or yourselves. And so I think that's critical for what is essentially a B2 prosumer product, and that service infrastructure needs to absolutely be there. I think second, the data, getting that data from you and understanding how people use the systems and the repayments, I think that would be really critical to see. So love to continue the conversation, and hopefully we can do something from the Untapped perspective as well.
Thank you so much, Jim. Great feedback from everybody. Really appreciate your interest.
And the public feedback, we're a little bit at the end of the hour, so we didn't quite have as many votes, but over 50% expressed interest in investing. So if there's any in the audience that are interested, please do get in touch with us, and we will put you in touch with Natalie. So on that note, thank you all for a wonderful presentations and for great questions and interrogation. And we hope to see you next time on our next event, which will be on October 21st, same time. And we'll be co-hosting that session with Stonks.com, which is an American platform for video investing. And a large number of investors, angels and institutions will be attending. So please attend. And you can find all of these agenda items and also past shows on our website at untapped-global.com. And so with that, thank you everybody for joining this week. Thank you entrepreneurs for pitching, and thank you for the angels for attending.
Thanks, Jim.
Have a good week, everybody.
Thank you.
Thanks, guys.
Bye-bye.
Well
Thank you.
done. See you soon.